have often showcased strategies on 1-minute charts. To master them, you need to spot signals quickly and make instant decisions on entering trades. However, not everyone can trade in such a fast-paced manner. How about a simple yet profitable intraday strategy on 15-minute charts? Sometimes I trade on these longer time frames, when I want to relax and not think about trade entries. Now I will share one such strategy with you. To trade successfully, you need to understand some basics. The main principle of this strategy is stability. It's not about making quick and massive profits. Yes, it's still intraday trading, but it's slower, allowing traders to get more accurate signals when 1-minute chart. And they don't have to rush into trades. After each signal, there is time to think before entering the market. By working for 2 hours a day, you can make 3 to 5 trades and earn up to 5% of your deposit per trading session without stress. You need reliable trading instruments to work with. First, choose currency pairs with highly liquid currencies. These are currencies of countries with very strong economies, like the US dollar, Canadian dollar, Japanese yen, British pound, and so on. If a trading pair includes the currency of an unstable country, you won't be able to trade effectively. The charts for such pairs are erratic or stagnant for weeks. This makes analysis impossible because there is hardly any market activity for that asset. When I was a beginner, I traded any and all assets, and it was a big mistake. I believe half of my losing trades could have been avoided by choosing better trading instruments. For example, look at a low liquidity trading pair, the euro to the Georgian lari. There is no problem with euro, but the lari is only accepted in Georgia, a small country with an economy largely dependent on tourism. The chart is erratic because hardly anyone trades with currency on the international market. Now look at the euro to the dollar pair. This is what a reliable and serious trading pair looks like, where you can trade calmly and without issues. The chart moves smoothly, in waves reacting to macroeconomics events and changing trends. If you understand these principles, be sure to like this video and subscribe to the channel. And now I'll move on to the theory, where I'll explain a simple and reliable intraday trading strategy. It's crucial to choose the right trading time. This strategy works best in a liquid and active market. The best market condition is during the European session. I don't know what time zone you live in, but the session runs from 8 to 17 GMT. This is the most active period for traders, so I recommend finding out what time is in your country. Now let's move to the chart. The strategy works excellently on 15-minute charts. On this time frame, the signals are clearer and better than on 1-minute charts. To prepare the chart for trading, we need to set up two popular indicators. The first is the moving average. In the settings, we need to choose a period of 9. If it's not set by default, be sure to change it. This is a very fast line that will indicate sharp price changes during signal processing. The second indicator is called RSI. It appears not on the main chart but at the bottom. RSI provides two types of signals. The first is divergence. This is when the chart moves in one direction and the indicator line moves in the opposite direction. The second signal is overbought and oversold zones. If the RSI line moves up into the overbought zone, it means it's time to sell. When the line is in the oversold zone, it's a signal to buy. If you want to know more about what overbought, oversold and divergence mean and how to use them to make big profits from the market, subscribe to my Telegram channel. There is a lot of material like this there. Plus, there is a trading academy where you can greatly improve your trading skills, learn various trading hacks, and get personal consultations and support from me. And now the most important part. Let's see what should be on the chart to open a trade and how to find the right entry point. The essence of the strategy is to find divergence on the 15-minute chart, like I have on my chart. Look for the RSI line moving in one direction while the chart moves in the opposite direction, or look for moments where RSI line enters the oversold or overbought zone. After that, switch your attention to the chart and wait for 15-minute candle to cross the moving average and close beyond it. When we open a trade in the direction the candle broke the moving average. In this case, we have an excellent opportunity to buy. Those trading Forex would set up the trade like this. If the entry was from the EMA indicator, the stop would be placed slightly below the line. The exit trades in Forex using this strategy, then the RSI enters overbought or oversold zone. This was the case for going long. Now let's see when to enter a sell trade. First, wait for divergence or for RSI to enter the overbought zone, as on my chart. Then wait for the price to break the moving average from top to bottom and sell below it. This will be the signal to enter a sell trade. Then wait for the price to start falling and close the position when you see the RSI fall into the oversold zone. In this case, you could open a trade here, where the price rejected to the moving average after breaking it. Place the stop loss slightly above the indicator line. All that's left is to wait for the oversold condition and close the position. Alright, enough theory. Let's see how it works in real conditions. Here's how a signal looks when it first appears on the chart. The price is going up while the RSI line is going down. At the same time, a green candle breaks the moving average. We just need to wait for it to settle and retrace to the line before opening a long position. The setting happened. Now we wait for the touch. The entry is made here with a small stop slightly below the moving average. Now we wait for the price to rise and for the RSI to enter the overbought zone. And here the RSI indicator goes into the overbought zone. Time to take profit. This is how the strategy works for Forex traders. In binary options, it's much simpler to use. You need to wait for the signal as I described and enter for 3 to 5 candles. That means for 45 minutes to 1 hour. Options close automatically depending on the chosen time. You can see how I trade using this and similar strategy in my Telegram channel, where there is a free trading academy, lots of tips, trade breakdowns and educational materials. And now the most important thing about all this. To make your trading consistently profitable and keep your nerves in check, you need to manage your risk properly. Without this knowledge, you will quickly say goodbye to your deposit. So, the main rule I remind you of in almost every video is to always split your deposit. Your deposit is 100% of your account. If you have $500 and open a trade for $250, there is a risk of losing 50% of your deposit. Recovering that money will be very difficult and your mood will drop significantly after the loss. Open trades with amounts no more than 3 to 5% of your deposit. In case of failure, the losses won't hit your pocket hard, and the probability of making a profit is much higher. The second rule is non-trading. Work only during strictly designed times. Dedicate 1 to 2 hours a day to trading at the same period. This will help you be intuitively ready for trades, avoid overtrading and stay focused. Believe me, if you spend dozens of hours a day at the charts, no profitable strategy will make you money. A tired person makes many mistakes. And that's it! Imagine just 2 risk management rules can greatly improve your trading. And now you know both. The key is to follow them. Yes, there are many other hacks and tips to reduce trading risks. But for a start, this will suffice. If you want more, subscribe to this channel. There are frequent videos that will be helpful for learning. Now I ask you to hit the like button on this video, since you watched till the end. Trading is much simpler than it seems. Ask any student in my trading academy. Yes, it's a set of rules that you must follow, but for this small inconvenience, you can gain extra income, consistent profits, and financial freedom. So, study this strategy, test it on a demo account, and apply it. But don't forget the rules and risk management, and you will definitely become a great trader. On this positive note, I must say goodbye. I wish you all good mood, success in learning, and big profits. Goodbye!